A big part of trying to decide how to allocate capital these days is trying to make an educated guess on what rates and bond yields are going to do. In this video, I'm going to highlight what I think are the key pieces from the December US CPI, the Canadian CPI, and what probably is maybe most interesting is the Bank of Canada statement, where the word pause was very strongly used in terms of interest rate hikes. Now, the Bank of Canada has been slightly ahead of the US Federal Reserve. They raised rates first, so it can be a bit of a leading indicator potentially for Americans to try to make some guesstimates on what's going to happen in the States. So really quickly highlighting the US December CPI. So they had a decline of 0.1. In the non-core, it rose 0.3. In the core, decline 0.3. This is excluding food and energy. Food would be really quite high, one of the leading parts of inflation, and energy would be one of the leading parts of deflation. So very opposite trends in those two pieces of the core. And we have this continuous sticky high inflation also in the shelter number. And one thing I'll compare towards the end of this video is the Canadian versus the US shelter month-over-month inflation, and also look at the US monthly numbers for housing over the last year. So this is the Bureau of Labor Statistics monthly CPI graph. We have a nice 6 months now of fairly low inflation. The last 6 months sum up to 0.9%. So the 6+% inflation is largely coming from the first part of the year. In red arrows, I've sort of highlighted the next months that are going to be rolling off. So when we get the January reading in February, we're rolling off a 0.6 month-over-month inflation. So there's a 0.6, 0.8, and then a 1.2 month-over-month inflation. So that's going to lead to probably drops in maybe 0.5 percentage point plus in each of the next 3 months in the overall inflation rate. So hopefully the trend of the last 6 months in the black box can continue. It's not until April that we kind of have our first 1 month of tough comparisons year over year, which will be harder to drop the yearly inflation. And then we've got some very big late spring numbers. This is the Bureau of Labor Statistics graphical version of the core and the regular CPI. So steady dropping, but still way too high. I've started looking into the pieces of CPI, trying to figure out what's causing the inflation to stay high. Food's certainly been one part that's staying high, and maybe not a lot of imminent help there. Energy is very volatile, fairly down at the moment, and I've really been looking at this shelter number, kind of expecting it to fall, but underappreciating the stickiness or the time lag of the shelter. Now, Jeremy Siegel is regularly talking about how shelter sort of in the real economy is starting to roll over, but there's just such a lag before it shows up in the CPI. So diving into that shelter number, month over month, it came in at 0.8%. So it's really staying high and kind of got worse compared to the previous month. And I was hoping with these high rates and hearing that the housing market is slowing down, we might start seeing some less inflation, but that has not happened yet. I really like this Bureau of Labor Statistics chart where they sort of take out certain items. So if you take out shelter, which there's probably a good chance that it's not going to continue to grow or accelerate with these high interest rates, without shelter, we would have had a fall of 0.5 percentage point in the CPI, which is quite significant. And this is sort of what we saw in Canada as an overall fall in the regular CPI. So it's not going to fall as fast as we'd like, but I think hopefully the feel of housing coming down is coming. So I start to dive into why isn't housing the that shelter part coming down quickly. So I looked into US month over month housing prices over the last year from the US Census Bureau. So the chart on the bottom right is houses sold. I took their data for median and average housing prices. So median would be the average house, where the average is all the houses sort of average added together and divided by the total amount of houses. So still certainly some inflation in housing prices, whether you use the average or the median. The graphical version in the middle sort of tells that story a bit more clearly. It's certainly increasing, but hopefully slowing down. I haven't put in the December numbers yet, but they're probably out by now. So still seeing slight increases in home prices, so still leading to some pressure on that shelter component, just maybe not the 0.8 month over month that we're seeing is not probably the current trajectory. So it's probably just a real simple answer. CNBC sort of summarized it in an article about the lag, particularly with leases typically being a year. There's at least or typically a 4-quarter lag between what the housing prices are doing currently and when that fully shows up in rents and the CPI, where food sort of the price of eggs or food changes. That's going to be felt sort of almost immediately in the grocery store. So I keep running my own sort of projections or guesstimates of where CPI might go, and this is for the US. So we have the December numbers are currently, I should make these white now. White is actual. Yellow is my sort of guesstimates or possibilities. So kind of just sort of continuing the trend and slightly dipping in the spring a little bit for both the core and the non-core. We could potentially be in the 4s by March. Okay. Again, remember that we have some fairly large month over month inflation rolling off. I believe it was 0.6 if my memory is right, 0.8, and then I think it was 1.3. Let's just quickly check those. Yeah, 0.6, 0.8, and then 1.3. So that's sort of why I feel reasonably confident that we're going to see probably inflation in the 4s. Now, whether it stays sticky into the spring or not, I have sort of the least confidence getting into the spring of whether we're actually going to see this deflation or not. So we'll have to see what happens come late winter and spring, whether we can get into the 3s or not. The Bank of Canada, I'll show shortly, is talking about trying to believe they'll be into the 3s this year. So that was the US CPI. The Canadian CPI came out later. It had a fall of 0.6% in December compared to a slight gain in November. So our first sort of really good rolling off in the CPI. Earlier in this statement, it talked about additional deacceleration came from homeowner replacement costs. So this is sort of to me, the big concern in the U.S., 0.8 month over month, where in the Canadian numbers, it's starting to roll off, not deflation yet, but really slowing down. The Bank of Canada, or the Statistics Canada, talks about the interest cost is obviously rising, and that's just a function of rates, but the other parts of shelter are deaccelerating. So certainly good news. They further sort of talk about that replacement costs and other homeowner expenses coming down sort of well under 5%, and owner accommodation expenses sort of in the 2s, which is good. So the Canadian month over month shelter inflation is half of the US at 0.4 versus 0.8. So certainly this is still high. 0.4 annualized just times by 12 is a little under 5%. Okay, so we still need to see this come down. But again, much better in Canada than the just under 10% in the US. And then the Bank of Canada statement is probably the most interesting part. I'd encourage you to go to CPAC on YouTube, the Canadian Parliamentary Affairs channel, stream this whole talk, or you can grab the transcript. That's what I've pulled and put on the screen. Much more specific language on slowing down than Jerome Powell and what the U.S. Federal Reserve is saying. He won't even dare hint at what McLaughlin was saying. So first, they did raise interest rates by 25 basis points to 4.5%. They're still doing quantitative tightening, but we expect to hold this policy rate at its current level. So it's nice to see this strong hold language, and I'm going to be highlighting it a few times in the next couple slides. We've raised rates rapidly. Now it's time to pause and assess whether monetary policy is sufficiently restrictive. Again, I'm just pulling out some key sentences, not the whole transcript. Later talking about pausing rates. It's a conditional pause, still could raise them again. But again, we just haven't had this language and talk from anybody in North America until this month. Okay. What the Bank of Canada sees is about 1% growth in 2023. So they're not seeing a recession, or don't predict it, and then growth slightly better at 2% in 2024. So again, we'll have to see whether they're right or not. Obviously, the war in Ukraine, it would be a major factor that can mess up models. Okay, and they do expect CPI inflation to fall around 3% in the middle of the year, which I think makes sense with what I'm seeing with the U.S. numbers, maybe 4% this spring, which would lead to sort of falling to potentially 3%. Or maybe lower later in the year. But again, we'll have to see how sticky food and shelter inflation is. So they're hoping next year to get to that 2% sort of long-term target. So the Bank of Canada did raise rates before the U.S. Federal Reserve slightly. So I think for the American viewers, using Canada as a slight leading indicator can potentially be a good idea or potential lead into what might happen in the U.S. And we'll see if Jerome Powell, I highly doubt he'll use the language that the governor of the Bank of Canada is using in the upcoming meeting, but hopefully we'll get that kind of language soon. I did like, this is sort of the end or wrap up of the statement, talking about all the rate increases that they've been doing. And again, I really thought this was pretty strong language from the Bank of Canada, the governor, that what they're doing is working and they've turned the corner on inflation, which, turned is not a future word, but a past tense type of word. So really nice to see this type of language in a statement. We've been, hoping for this for 6 months. So hopefully you found this sort of highlights of the CPI sort of all over North America and highlights of the Bank of Canada informative, and can maybe help guide you in some of your future investing decisions.